Hey guys, last week we talked about interest rates part 1. This is going to be interest rates part 2 and a little bit longer of a video. I typically try to keep them under a minute. This one's probably going to go for 2 minutes, maybe a little bit more, because what I'm talking about are the factors that go into an interest rate. So when you're quoted an interest rate, when you're given an interest rate, how is that derived? And I've got 9 main factors here that I want to go through and kind of talk about each one. So the first one is going to be your loan type. Is it a conventional loan, which is government regulated, or is it going to be a government insured loan? So FHA, VA, or USDA. Government insured loans are a little bit lower of an interest rate than government regulated loans, so keep that in mind. Occupancy type, number 2. Is it a primary residence? Do you live there? Is it a secondary residence, a vacation home, or is it an investment property? Do you rent out the property? Primary residence, secondary homes are going to have a little bit lower interest rate than investment properties. Another big one is credit score. Do you have a 640 credit score or an 800 credit score? The higher the credit score, the lower the interest rate. Loan amount, another big factor. Is it a $100,000 loan amount that you're getting, or is it a $500,000 loan amount that you're getting? This can play a big role in your interest rate. Property type. Is it a single family home? Is it a condo? Is it a manufactured home? Is it a multifamily home? So typically single family homes are going to have the lowest rates. Condos may be slightly higher, manufactured may be slightly higher, and then multifamily are typically going to have a slightly higher interest rate as well. Right, like duplex, triplex, quadplex have a little bit higher of an interest rate. Loan purpose, is it a purchase or is it a refinance? Right now, purchases across the board are a little bit lower than refinance interest rates, so something to keep in mind. Term, is it a 30-year loan? Is it a 15-year loan, a 20-year loan? 30, 20, or 15-year loan. The lower the term, the lower the interest rate. Down payment, are you putting 5% down, 10% down, 20% down? Now this is an interesting category because depending on your loan amount, this one can so maybe 5% down might have a lower interest rate than 20% down, because with 5% down, your loan amount's a little bit higher. So keep that in mind. Down payment plays a factor, although it's a little bit of an interesting factor depending on your scenario. And then finally, I have on here amortization. This one's not that really big of a deal. Everyone's going with fixed interest rates right now. No one's going with adjustable interest rates. Adjustable might have a slightly lower interest rate than a fixed interest rate, but the risk for reward is just not there. Fixed interest rates are just so low. There's really no point of going with an adjustable rate right now. So hope this helped. If you have any questions, definitely give me a shout. 813-767-4247. Bye.